This presentation is for Chapter 8, Flexible Budgets and Standard Cost Systems. In Learning Objective 3, we will learn to compute the standard cost variances for direct materials and direct labor. When we look at the cheerful color flexible budget performance report, it shows several substantial flexible budget variances, including a $13,000 unfavorable variance for direct materials and a $10,400 favorable variance for direct labor. Both favorable and unfavorable variances should be investigated if substantial to determine their causes. For example, suppose a company avoided routine maintenance on machinery in order to have a favorable cost variance in the current period. In a later period, the company could have a major breakdown that could have been avoided if the machinery had been properly maintained. The breakdown could require not only a substantial repair bill but also a halt in production that could lead to lost sales. Therefore, managers should look at any variance that is significant. The flexible budget variance for direct materials is $13,000 unfavorable. This slide presents additional data concerning direct materials, including standards that we discussed in the previous section. Direct materials cost standard is 35 cents per pound of paraffin. Direct materials efficiency standard is 5 pounds of paraffin per batch of crayons. So the direct materials standard cost per batch is equal to 35 cents per pound times 5 pounds per batch, or $1.75 per batch. The actual amount of paraffin purchased and used was 325,000 pounds, and the actual cost of paraffin purchased and used was $104,000. Using the information above, we can determine the direct materials cost variance, which measures the difference between the amount actually paid for direct materials, or the actual cost, and the amount that should have been paid, the standard cost. This variance measures how well the business keeps unit cost of direct materials within standards. Notice first that cheerful colors paid less than expected for the paraffin. The actual cost per pound of paraffin is 32 cents, which is equal to the actual cost of $104,000 divided by 325,000 pounds. Using the formula, the direct materials cost variance is $9,750 favorable. The direct materials cost variance is favorable because the purchasing department paid less for paraffin than the standard cost. The direct materials efficiency variance measures the difference between the direct materials actually used, called the actual quantity, and the direct materials that should have been used for the actual output, or standard quantity allowed. This variance measures how well the business uses its materials. To calculate the direct materials efficiency variance, the standard quantity of inputs allowed has to be determined. So the standard quantity of inputs allowed is the quantity that should have been used for the actual units produced. For cheerful colors, the standard quantity of inputs, or paraffin, that workers should have used for the actual number of crayon batches produced is 260,000 pounds, which is equal to 5 pounds per batch times 52,000 batches. The direct materials efficiency variance is unfavorable because workers used more paraffin that was planned or budgeted for 52,000 batches of crayons. This slide summarizes how cheerful colors divides the $13,000 unfavorable direct materials flexible budget variance into its cost and efficiency components. Note that favorable and unfavorable variances are netted together in the same way that debits and credits are netted together. If both variances are favorable, then they would be added together to create a total favorable variance. If both variances are unfavorable, they would also be added together to create a total unfavorable variance. But if you have a favorable variance and an unfavorable variance, then they have to be subtracted from each other, and the variance is determined to be favorable or unfavorable based on which one is the larger amount. So when we look at this slide, in summary, we can see that the workers used 65,000 pounds more of paraffin than was expected. They should have used 260,000 pounds, but they used 325,000 pounds. Also, Cheerful Colors paid 32 cents per pound of paraffin instead of the standard rate of 35 cents per pound. This cost saving increased profits by $9,750 as shown by the favorable cost variance, but the cost savings weren't enough to offset the inefficient use of the paraffin, resulting in an overall reduction of profits of $13,000. So Cheerful Colors purchasing manager may have negotiated a lower cost for paraffin. The production manager in charge of making crayons needs to be able to explain why workers use so much paraffin to make the 52,000 batches of crayons. Maybe the paraffin was of lower quality and that caused crayons to be rejected. Did the workers waste materials though, or did the production equipment malfunction? Cheerful Colors top management needs this type of information to decide what corrective action to make. This slide shows the information to analyze the direct labor flexible budget variance. The flexible budget variance for direct labor is $10,400 favorable. This slide shows the additional information concerning direct labor, including the standards that we discussed in the previous section. The direct labor cost standard is $12 per direct labor hour. The direct labor efficiency standard is 0.25 direct labor hours per batch of crayons. The direct labor standard cost per batch would be equal to the $12 per direct labor hour times the 0.25 direct labor hour per batch, or $3 of direct labor hour cost per batch. The actual amount of direct labor hours was 10,400 and the actual cost of direct labor was $145,600. The flexible budget variance for direct labor was $10,400 favorable. Using the additional information, we can determine that Cheerful Colors paid more than expected for direct labor. The actual cost per hour of direct labor is $14. We can calculate that by taking the actual cost of $145,600 and dividing by the actual direct labor hours of 10,400, and that gives us $14 per direct labor hour. The 20,800 direct labor cost variance is unfavorable because Cheerful Colors paid the workers $2 more per hour than what was budgeted. The standard quantity of direct labor hours that workers should have used to make 52,000 batches of crayons is 0.25 direct labor hours times the 52,000 batches, or 13,000 total direct labor hours. The $31,200 direct labor efficiency variance is favorable because the workers worked fewer hours than budgeted to produce the 52,000 batches of crayons. So this slide summarizes how Cheerful Colors divides the $10,400 favorable direct labor flexible budget variance into its cost and efficiency components. The $10,400 favorable direct labor variance suggests that total labor costs were significantly less than expectations. To manage Cheerful Colors labor costs, we need to gain some more insight. So the workers made 52,000 batches of crayons in 10,400 hours instead of the budgeted 13,000 hours for a favorable efficiency variance. Cheerful Colors paid the employees an average of $14 per hour in 2025 instead of the standard rate of $12 for an unfavorable cost variance. So this situation reveals a trade-off. Perhaps Cheerful Colors hired more experienced and thus more expensive workers and had an unfavorable cost variance. However, due to more advanced skills, experience, and/or motivation, the workers turned out more work than expected and the strategy was successful. The overall effect on profits was favorable. This possibility reminds us that managers should take care in using variances to evaluate performance. Managers should always carefully analyze the data before taking action. And that is the conclusion of the presentation for Learning Objective 3.